All right, let's talk about Robinhood's third quarter financials for 2025 because, wow, the numbers are just stunning. We're going to break down the key takeaways straight from the CFO's report.
Okay, first up, the number that's got everyone buzzing. In Q3, revenue didn't just inch up, it more than doubled compared to last year. I mean, that is a massive, massive leap forward.
And if you thought that was good, hold on. As revenue shot up, earnings per share more than tripled. This really shows you the incredible leverage they've built right into their business model.
So, what's the big takeaway here? This wasn't just growth for the sake of getting bigger. Nope, this was profitable growth. And we're talking about their strongest quarter of it ever. So let's dig into how they pulled it off.
All right, first section. This record-breaking quarter, it didn't just pop up out of nowhere, right? It was actually the result of some serious momentum they've been building all year long.
Just take a look at the years so far, and you'll see how consistent this has been. Revenues, up 65%. Earnings per share, up a staggering 150%. Q3 was really the exclamation point on a year of just incredibly powerful, sustained performance.
And this right here, this is the how. They hit 75% incremental adjusted EBITDA margins. That sounds like a bunch of financial jargon, but in simple terms, it means for every single new dollar of revenue they brought in this year, 75 cents of it went straight to profit. That is an incredibly efficient machine at work.
So you're probably wondering, where did all this record-breaking revenue actually come from? Well, the answer is pretty much everywhere.
I mean, this wasn't just one thing working. We're talking trading volumes exploding by double, even triple digits. Interest-earning assets shot up over 50%. Securities lending hit a new all-time high, and their gold subscription service jumped a whopping 75% in members year over year. It's just a crystal clear picture of multiple engines all firing at once.
And the story here is also about diversification, for sure. The portfolio is clearly getting stronger. In Q3, two more of their business lines, that's prediction markets and the newly acquired Bitstamp, they basically graduated into the big leagues. Both of them crossed the $100 million annualized revenue mark.
And get this, prediction markets hit that $100 million run rate in less than a year. That makes it the fastest growing business in Robinhood's history. And based on what they saw in October, it's already on a $300 million run rate. That is just incredible speed.
Of course, this kind of explosive growth, it doesn't come for free. So let's flip the coin and talk about expenses and why, believe it or not, performing this well can actually lead to higher spending. So, the company spent about $40 million more than they planned in Q3. But hold on, this isn't a story of bad planning. It's actually a direct result of their success. You see, the first reason was higher bonus payouts because the team absolutely crushed their goals. And the second, an unplanned tax expense that only got triggered because Robinhood's stock price did so well. Kind of a good problem to have, right? Okay, so with all that in mind, how does this quarter change the outlook for the entire year? Let's take a look at the new forecast. They're now guiding their full-year expenses to be around $2.28 billion. And this number reflects those costs of success we just talked about, but it's also a strategic choice. They're reinvesting some of that extra profit to pour fuel on their fastest-growing businesses. It's a classic move, investing in future growth.
And that brings us to what's next. Because the momentum from Q3, well, it didn't just stop on September 30th. It rolled right into the final quarter of the year.
And the numbers from October show that this engine is still red hot. We're talking new all-time records in equities and options trading. Prediction markets and margin balances, new peaks, net deposits stayed really strong, and even crypto volumes saw a nice step up. The trend isn't just continuing. You could say it's accelerating as we head toward the end of the year.
Okay, now amid all these incredible financial numbers, there was another really big piece of news, a major leadership change, right at the top.
Jason Warnick, the CFO who's been guiding the company for 7 years and the one who presented these very results, announced he'll be retiring in 2026. Stepping into his shoes will be the current SVP of Finance and Strategy, Shiv Verma.
And to make sure this is a really smooth handover, the outgoing CFO gave his successor the strongest possible endorsement. He said, "I've worked closely with Shiv these past 7 years, and I've got absolutely complete confidence in him. You're going to find that he's seriously world-class." I mean, that really signals stability and a clear plan to continue the strategy that delivered this record quarter.
So when you put it all together, what do we got? Record growth, spending that's actually driven by success, and new leadership at the financial helm. It all leads to one final big question. Is Robinhood's momentum unstoppable? Well,
Only time will tell. Thanks for tuning in.